bond investing is becoming increasingly popular in India. Amidst increasing volatility in stock markets and decreasing FD rates, retail investors are now looking for lucrative fixed income investments and alternative investments to diversify their portfolios. However, most online bond investment platforms in India aren't as evolved as online stockbrokers like Zerodha and Groww. A good bond investment platform needs to fulfill a few basic requirements of investors, which include secure transactions, credibility, reliability, and a praiseworthy support system. A bond investing platform needs to provide investors with all the information needed to make an informed investment choice. These include credit ratings, yield to maturity or simply yield, coupon or interest rate, etc. Top platforms in India. Wealth. Wealth is a leading bond investment platform in India with over 25,000 investors on board. The platform provides carefully curated senior secured bonds to retail investors starting at a very low ticket size of just 10,000 rupee. Wealth is working towards democratizing debt investments in India by making unique assets like bonds accessible and affordable to small retail investors. Wealth is backed and promoted by some of the most prominent fintech founders in India. The platform is gaining popularity in India as an online bond investment platform for the masses. Wealth provides investors with carefully curated secured bonds often backed by secured collateral. One can start investing in these bonds for as low as 10,000 rupees. Once purchased, the bond units are credited to your Demat account and can be tracked on the Wealth dashboard along with timely updates. The platform lists bonds with all relevant information easily accessible to investors. One of the best features of Wealth is that it mentions risks alongside the fixed returns of each bond. Both listed and unlisted bonds are available on the platform, and you can identify them with the help of the tags provided. Basic information about the bond, such as credit rating, interest and principal repayment details, minimum investment, etc., are given at the outset. Altify. Altify is a new age investment platform that enables retail investors to invest in fixed income security. It offers these securities that were so far available only to institutional investors, retail investors, affluent individuals, and HNIs. Altify is a platform that lists bonds and commercial papers of emerging companies in various sectors that institutions, HNIs, and retail investors can buy. It is a part of Northern Arc Capital, which is a reputed institution in the field of financing, syndication and structuring, and fund management. Altify has some similarities to other platforms in India like Bansindia and Goldinpi where individuals can buy bonds. However, Altify is not a pure place marketplace because it lists only those bonds which are subscribed by its parent company, Northern Arc. Altify focuses on bonds that are issued by companies having strong credit, and which the parent company Northern Arc has comfort in underwriting. The yield of bonds ranges from 8–13%. Apart from the bonds, tax-efficient structures like MLD are also prevalent. Is Altify safe? One of the salient features of the platform is that all issuances on the platform are underwritten by Northern Arc. The NFBC also invests in the listed products. How Northern Arc has skin in the game. All securities are first taken on Northern Arc's balance sheet and then sold down. While there is no mandatory minimum retention, they invariably tend to hold on to most securities would at least have exposure to other securities of the same issuer, ensuring a high level of incentive alignment. Strong risk management. As a business segment, Altify works in conjunction with other teams of Northern Arc. This helps us utilize the capabilities across product sourcing, diligence, underwriting, structuring, risk monitoring, and technology. Northern Arc currently has over 300 employees. Goldenpi Bonds. Goldenpi claims to be India's #1 platform for online bond investment, with over 250,000 registered investors on the platform. It is one of the earliest fintech companies in India to bring bonds and debentures to individual investors and has been around for over 5 years. Goldenpi is backed by Zerodha's Rainmatter Capital and received 3.5 crore rupees funding from the same. The platform has also partnered with leading brokers and financial institutions like Zerodha, IIFL Securities, Axis Direct, etc. Goldenpi provides investors with a large collection of bonds to choose from, based on individual financial needs. Ultra short-term bonds, highly safe bonds or tax-free bonds. You can choose what suits your needs the best. You can start investing in bonds for as little as 10,000 rupees. Goldenpi lets you filter your bond searches as per your investment purpose, credit ratings, yield, issuer type, investment amount, etc. Bonds India. Bonds India is an online platform that lets you invest in different types of fixed income investment instruments including corporate bonds, tax-free bonds, 54EC bonds, government bonds, and fixed deposits. This bond investment platform enables investors to trade their fixed income securities, like corporate bonds. Bonds India's unique bond trading engine is integrated with their exchange that offers real-time price discovery along with end-to-end online transactions. You can start your bond investment journey for as low as a few hundred or thousand rupees, and choose from a plethora of corporate and PSU bonds listed on the platform. Now let's have a look at my portfolio.
So we just saw the various bond platform which are available for investment. Now I'll show you my portfolio, and I'll also give you a glimpse of various platforms which I have been using to invest in bonds. There's some key factors to keep in mind when investing in bonds. One is the taxation of the bonds. So for most bonds, the taxation is at your current marginal tax slab, which means that if you are on the 30% tax slab, you will have to pay 30% on the bond. So you have to compare it vis-a-vis something which has a lower taxation if you're investing for more than 3 years. For example, if you're investing in a bond for 3 years which is giving 9%, then you are better off investing in a Bharat ETF bond, because you will get indexation benefit, and after taxation you will end up around 6.3 or 6.4 by taking lesser amount of risk. But if you're looking at a lower time horizon, then you should directly compare the yields, because in both cases, be it debt funds or Bharat ETF or bonds, you'll have to pay the maximum tax. Or if you are investing through an account where you don't have to pay, which is at a lower tax rate. Having said that, I'll show you some of the platforms I've been using. One platform which I really love is Altify. The reason is because you get really high yield bonds here. Some of the bonds are yielding 13% and which have very low remaining tenure. The other good thing about this platform is that it is backed by Northern Arc, and most of the bonds which are listed here are either part of Northern Arc's investment, or they've already done due diligence on these bonds. So this gives you an added layer of cushion, but this does not mean that you do not do your own due diligence, regardless of the fact that it has been done by another entity. So you also have commercial papers here, so you can get a commercial paper which yield around 8 to 11% for 3 to 6 months. So you can see currently Navi is there, but there have been higher yielding CPs like Crazy Bee also in the past. In terms of bonds, they have Cash, Stashfin. They also have some market linked debentures. For instance, they have a MLD for Muthoot Microfinance. The good thing about MLD is that beyond 1 year it is taxed like an equity, so which means if you have less than 1 lakh in capital gains, you will not have to pay any tax. In this platform, I invested in multiple bonds. I invested in Cash, Dwara, KGF, Stashfin, and Navi. The other platform which I've been using is Wind Wealth. Again, Wind Wealth, generally the bonds which you get are between 10 to 11%, and I love the fact that each month Wind Wealth does its own due diligence and then come up with the bond. They give a lot of details about the bond, and the structuring of the bond is also quite interesting, because most of these bonds have interest repayment or principal repayment much before their maturity, so which means that the chances of you losing your complete principal is quite less. And most of these bonds are senior secured, which means they have a high level of collateral backing them, which is beneficial for the investor. So this platform I also use if I find a good bond here. Generally they have 1 or 2 listing every month. If I feel the yield is lucrative and there are no other good bonds in other platform, I invest in through Wind. Then there's a platform called Golden Pie. So again, in Golden Pie, I choose a few bonds because some of the bonds here have longer tenure, and then I compare it with the post-tax return of a debt mutual fund or a Bharat bond ETF. So for instance, currently there are a few bonds here which is yielding 13%, but for instance, I'm not very comfortable investing in India Bulls. But there is a Grow Capital IPO coming up for 11%, which I might invest in, but I'll only invest a small amount because the minimum investment is 10,000. I feel it's a good deal, but tenure is on the higher side, so I don't want to put in a lot of capital here. One thing is for a lot of the bonds which are listed on these marketplaces like Golden Pie, So the difference between, for instance, the difference between Golden Pie or Wind and Altify is Golden Pie is purely a marketplace. It will just list the bond which is available in the market, whereas Wind Wealth and Altify will do their own due diligence and then list something which they are comfortable. So that's why they have an enhanced risk management process in place. So before investing anything on Golden Pie, you can also check the yields of those bonds either on NSE website. So you can see you go to an NSE website and you go to the bonds traded in capital markets. You can check the various bonds, the current price, the coupon rate, and you can select a particular bond. See the volume. It's important to have a good trading volume if you want to buy, and you can buy it through your broking account. You can buy it through any broker like Zerodha. You can also check yields of a lot of corporate bonds on a website called FinQs. So you see FinQs lists the current price of various bonds. So for instance, ECL, which is the Edelweiss Capital Limited bond, which is maturing in 2024, is yielding at 9.86, and so on. So this gives you a good idea what are the current yields on the bond, and then probably you can then decide if you want to trade those bonds at these current yields. Like I covered in my earlier video, for passive debt ETF, you can choose something like a Bharat bond, which is currently giving 7.04%. Right now, I'm preferring 3-year Bharat bond over a 3-year mutual fund, because in a Bharat bond ETF, you lock in the yield because these bonds will be held till maturity, while in a mutual fund, every time they will keep on churning the portfolio, which means if the interest rate goes up from here, you lose because of the duration risk. I think three platforms are more than enough for you to create a good bond portfolio. There are a few other bond platforms in the market like Bonds India. You can also explore them. They are equally good. In fact, Bonds India has a very good user interface. I'll give it a shot in future, and I'll also maybe do a video on it.
You can read the full blog on this topic by using the link provided in the description. That's it for this video. If you enjoyed it, then hit the subscribe button and turn on the notification for future video updates. Also, share your reviews in the comment section. See you in the next video. Till then, bye bye.